Are you thinking of selling or buying a home and are not sure about rising interest rates and their effect on home prices? In this video, I'm going to put some things into perspective for you on both ends of a real estate transaction and hopefully help you to make an educated decision on whether moving forward now makes sense. I'm Karl Pineiro, and I'm going to share some information about rising mortgage interest rates and how they relate to home prices in hopes that you don't shy away from selling or purchasing your home now. So far as of May 2018, mortgage interest rates have risen by almost half a percentage point year to date. It's also true that many economists are projecting that rates could increase to 5% by the end of the year, giving us a 1-point increase for 2018. So let's answer the question, what impact will rising rates have on home values? Many quickly jump to the conclusion that an increase in mortgage rates will have a detrimental impact on real estate prices, as fewer buyers will be able to qualify for a loan. This seems logical. If there is less demand for housing, then prices will drop. However, in a good economy, rising mortgage rates increase demand as many prospective purchasers immediately jump off the fence to guarantee they get that lower rate. Now let's look at home prices the last 4 times mortgage rates increased dramatically. In July of 1984, rates increased just over 2 percentage points in just over a year. In October of 1987, rates rose almost 2.25 points in just 7 months. Yikes! In December of 1994, rates rose by almost 2.5 points in a little over a year. And in May of 2000, rates rose by about 1.5 points in about a year also. In each case, home prices appreciated, and they did not depreciate. Prices went up 6.6% in 84, 5.2% in 87, 1.2% in 94, and a whopping 10.9% in 2000. Now, no one is projecting as dramatic an increase in rates as the examples above. Like I previously stated, most are projecting an increase of approximately 1% by the end of the year. The last time mortgage rates increased by 1% over a 12-month period was January of 2013, when rates were at 3.41%, to January of 2014 when they rose to 4.43%. What happened to housing prices during that time span? They appreciated by 9.8%. Recently, Rick Palacios Jr., Director of Research at John Burns Real Estate Consulting, explained, mortgage rates have risen 1% or more 10 times in the last 43 years, with little impact on home sales and prices when the economy was also strong. Historically, rising confidence, solid job growth, and higher wages have more than offset reduced demand for housing, resulting in higher mortgage rates. Bottom line, folks, when mortgage rates increase, history has shown that prices appreciate and they do not depreciate during that same time span. So if you were planning on selling and were worried about price trends and whether or not they may take a turn for the worse, or if you're a prospective buyer and thought you should wait to see if prices drop anytime soon, it doesn't look that way. If you appreciate the information I'm giving you, please like the video and subscribe. Feel free to leave any comments or questions below, and I'd be more than happy to respond. My team and I come from contribution and have hearts of teachers, not of salespeople. Until the next video, rejoice in the blessings of our lives.